Is Q4. Huge drop yesterday. It's trading up a little bit pre-market, but if it falls towards the 15 level, you'll notice there's a huge gap there. So that goes back a ways. So I don't know if we'll get there. It's still quite a ways away, but a big gap on Q4 going back. Looks like Q4 on the weekly. Definitely over 200 there. So that's that level. A little scary to jump in front of it on this, in terms of buying there. But I would say again, at 15 looks to me to be a possibility. And you can see how it reacts to it. Maybe it does go down to 200 right there. Quite a fall on that. Also, remember yesterday I talked to you guys about watching small China solar plays. They started to uptick a little bit towards the end of the day. So let's just keep those on our watch list. Off the top of my head, I can think of SOL, LDK, STP, TSL, HSOL was one that ran about 10% yesterday, so we probably wouldn't want to chase something like that. But any of these that, if we continue to see the momentum, let's say HSOL starts to run again today, it probably is a good signal that there is some sort of money flowing into those beaten down China plays. So it would be definitely something I'd be looking for myself. Aside from that, again, it looks pretty quiet here to start the day. Percentage Genomics is up about 36 cents. So a little bit of a move there. Trying to think if there's any sympathies for that. Gene, GENE is a sympathy, but I think that's already up. That's another small cap gene company. Futures just up 3 points as we get started here. We're about 5 minutes, a little over 5 minutes away from the open. A lot to do with just sharpening skills. It's kind of, whenever I'm trading alongside traders and some people in the chat room and stuff like that, I find that a lot of people, they see patterns and then they kind of like stretch it. And it's, you stretch it enough, all of a sudden that pattern's not valid anymore, right? And I think it's important to really go over these types of things to make sure everyone understands what we look for and how exact we have to be. Because it's all about picking that right pattern, price, and time point without kind of fabricating something on that chart. All right. So keys to unlimited success. All right. Angles of a flag, consolidation inside bar patterns. All right. How a chart comes into a major support resistance master level. Balanced pullbacks are proportional. Understanding that is very important. Find and define pivot. Key levels to trade when multiple levels are present. So again, sometimes you see like 10 levels. Well, which one do I pick? Which one's the right one here? And that's a definite important one. First hits have higher success rate. You guys know that, I think. We'll cover that. Entries are determined by volatility and volume, and analyzing risk reward prior to entering a trade. Trading with without moving averages, trend line support. All right. So we'll start with the angles on a flag, consolidation inside bar patterns. Very, very important because again, we've seen flag and consolidation patterns that are different. I mean, you have perfect right angles, and then you have ones that almost go straight down after a big wide range bar up. Right? The angle means everything to me when it comes to determining success. In my brain, it's programmed to look at a pattern, a flag pattern, right? And my eye pinpoints the angle, and in my brain, it's the percentages of success go up or down based on what I'm seeing. Right? A 90-degree angle. That's a true bullish bull flag. I mean, that's a standard in the textbook. If you see a wide range bar up and then very tiny sideways right angle bars, that's going to be a perfect bull flag pattern or bear flag on the downside if you're looking at the other way. With other proper PPT factors, that's always what you want to do. I always want to remind you guys about that because I think remembering that it's not just one factor. I mean, you might see the perfect bull flag, but let's try to find that secondary factor. We may still take the trade, but that second factor will make it obviously a higher success rate. Okay. As the angle decreases, the success rate also decreases. So again, as that angle goes from right, sloping down, the more it slopes down, success rate declines. This is where it's all about fine-tuning your eye. You guys will be able to do this so easily eventually, hopefully not too long. The first 3 candles, those look good. Yeah. Those are awesome. Then that 4th candle, as soon as you see that 4th candle, it should be an alert going out that it could be failing. Most people will be paralysis by analysis. They'll say, oh my goodness, it doesn't look great, but I don't want to get out of the trade because I don't want to think that I picked the wrong trade. They'll stick with it, and then we see what happens. When you get to that point, if you get to that point, you can literally, that will be, and hopefully you're on the positive side of that trade still, because again, flag pattern and the opposite to move up. So if you were a buyer right over in this area, or even, you could have bought this even over here and it still would have been okay. Pops up, first 3 candles, you're still in the money. That fourth one, either break even or a small gain, just move out. I agree. Yeah, and it's a big thing too. The charts really do tell us everything. It's just a matter of who we interpret it correctly. Almost any move in a chart, if you go back, it's usually hindsight, but you can, using the methodology, you can pinpoint a couple of reasons why it may be what it did. To trade or not to trade? How pattern meets price. So pattern meeting price is the difference between profitability and not. It comes down to that. The sharper the move into a level, usually the better the bounce. And this is something that a lot of times I run into in the chat rooms. Someone will bring up the double bottom, and the stock is had a little bit of a bounce off double bottom, and just slowly floating sideways, slowly floating into that level. The key is when you fall. If you take a ball, I wish I had a ball here, but if I drop it from up here, I should get a retrace bounce, right? There should be a 33% bounce or 25% bounce from that distance. If I drop the ball from an inch off the floor, there's not going to be much of a bounce. So you have to remember that in trading, because you don't want to jump in a trade where the reward in that trade is going to be a cent bounce. Like the Bank of America bounce, it's down 3 cents on the day into double bottom. Maybe you get a bounce of a penny. That's it. But again, unless you're buying 100,000 shares, if you're going to try to get out of 100,000, it's going to be tricky. Right? Each consolidation on the way to a master level lowers your chances of profit. So as you come down, and this is something we go over in the chat a lot, as you come down and you go sideways, the more it kind of stops along the way and takes a break, the more likely it can actually have enough energy to break through. Just like if you're a marathon runner and instead of running a full marathon at once, you're allowed to take breaks along the way of 30 minutes and recharge. You can keep going, maybe even past that end of the marathon race. All right, same thing again with the charts. All right. It's up to each trader's trained eye to decide if it's a high enough reward level based on how the chart moves at that level. So everyone has different risk tolerances. Some of you guys are more willing to jump out and take out a trade that maybe is a 79, 78% chance of a winner. Others of you guys want 85, 86, 90%. Each person needs to decide on their risk tolerance, and we also live with that. All right. Note the extended move up with a 3-bar surge into the end, major double top resistance, the highest profitability setup. That's a perfect one right there. And again, notice you really didn't have any long consolidation patterns ahead of time, and you got the 3-bar surge. Awesome pattern right there. All right, now in this case, though, this is kind of what I'm talking about. So you got the marathon runner, it's getting towards the end, maybe a couple miles left to go, and decides to take a breather. Right, that's got to be an alert to you that now that double top is not good anymore. Got to be an alert. Right, now, could it still work? Sure. It probably, looking at this, it probably has a 50-50 chance. But again, we're not in the business to be gamblers. We want high percentage, 75, 80, 85, 90% chance of a winner. And again, bullish consolidation, oftentimes you can blow through that level. Essentially, or especially when it's not a major pivot. Like, this is where later on we'll get into what major pivots are and how to determine the difference between a major and a minor pivot. If this is a minor one especially, you stay away from that. All right. So, question here is, extended move, obviously this chart is super extended. Would you short that? No. Correct. All right. Not only is it consolidating, in all fairness, the consolidation is small, it's only 2 candles, but if you look at that first candle of consolidation there, the tail almost achieved the double top. To us, that's an in-spirit of touch, and it's telling you, listen, this thing is already touching, it's kind of already played out. If I didn't get the entry because my entry was at that level specifically and it didn't fill me, tough luck. Just move on, let it go, move on to the next chart. Next up, we have this chart, though. All right. So you consolidation up here. So you're doing a consolidation, and then it comes down here. Did you buy that? I mean, would you buy that double bottom?
Yeah.
Why would you buy it?
7 bar down, double bottom.
7 more down.
Three cactus to get out of that trade.
Yeah. Exactly. Exactly.
This spike came into gap fill.
Okay. Oh, yeah. So we're going quick. Wow, it's a nice little over today. Apple's only down $1, so it's not Apple. Let's see what it's selling here. JPM's down 14 cents. Let me just throw that chart.
Nine down two, I think.
Yeah, that's not, I mean, 50 MA, 50 MA there too. I mean,